You heard the Besant comments just now. The Treasury Secretary is saying that there could be economic certainty down the line. What exactly do you think that means, juxtaposed with the policies themselves and what you've seen in the markets over the last couple of weeks?
I mean, look, the administration hasn't strictly said that they want liquidationism or that they want a recession now to clear up all the misallocation from the system, which is it's a concept that goes back to the Austrian School of Economics or to even the Great Recession or the global financial crisis. Is this idea that, sometimes you need to purge all the bad stuff from the economy to then have a boom. They haven't said explicitly they want this, but they have recently indicated that maybe that could happen, right? And we've heard the Treasury Secretary talk about a detox period. And there's some people in Wall Street who seem to agree that maybe there is this long-term upside. I think it's a dangerous thing for your portfolio if officials really think that way, for many reasons. One of them is simply the fact that even if the economic transformation that the administration is trying to achieve does lead to positive outcomes, it wouldn't, like the fact that we would have a recession or a downturn would be negative for it, because we need to separate the supply side of the economy, and many discussions can be had about that, with the idea that if you have a shock, the transformation improves or has upside for corporate margins, which is ultimately what stock markets care about. I think it's very hard to say that that's the case.
There's been uncertainty, not so much about the bigger picture or macro mission statement, if you will, from the administration, but just how they go about doing it and the execution and what is seemingly a lot of back and forth, moving forward with certain policies, to walk them back, to move them forward again. So there's clarity and uncertainty at the same time. What exactly does that do for the marketplace overall, specifically when it comes to the economy versus the market?
Well, a point I make in the piece is that ultimately, if we're talking about economic demand, which is different from supply, when we're talking about, well, we need a detox period from, the importance that the government has had on corporate earnings, that is true from a demand standpoint. If you look at, where the income is coming for the corporate profits that we see in the national accounts, it's true. I mean, the government's fiscal deficit has been very important. But the issue here is that cutting that fiscal deficit in itself doesn't generate growth in income elsewhere. This doesn't mean you cannot have a plan to make this happen. And for example, you could see a corporate investment boom that drives that growth, and then the deficit can be narrowed either automatically or through policy in a way that still sustains that growth in profit margins that has been so good for investors recently. But it doesn't happen automatically. Like, you need a plan to achieve that. And actually, the uncertainty that tariffs have been creating, those are negative for corporate spending. They create a climate of uncertainty that makes it harder for this private growth to take over from the public spending. And there's even the question on, as I say, demand is different from supply. Does shifting this picture necessarily drive greater productivity growth? It's possible if the growth is in the right industries and these companies push the technological frontier. But of course, we've already been seeing a lot of that dynamism, at least on the tech sector of the US corporate landscape. So the fundamental question here is the same as always. How do we foster, more growth in complex industries in the right ways? And this question is not answered by simply saying, oh, we need to detox. It's just not as simple as that.